So up first, as I mentioned, delivering our opening keynote is Susan Yavari, Senior Regulatory Advisor at Pharma. And Susan's going to be speaking on the practical benefits of a consolidated tape for ETFs. This is obviously a huge topic at the moment, given what happened with the European Council and the European Parliament. So there's no one really better placed to speak about kind of the latest that's going on in this space. So if I could welcome Susan up on stage. Susan, good to see you.
Hi, Tom. Good morning. How are you?
Morning. Very well, thank you. So I'm going to hand over to you now. And Susan's going to speak for around 15 minutes or so and leave a few minutes at the end for questions. So Susan, over to you.
Okay, great. Thank you. So actually, I was quite pleased that Tom asked me to do this and to give this short talk, because it was an opportunity for me to kind of relive the whole consolidated tape journey, but this time from a distance. So I think it was quite educational, for me as well. It was almost 2 years ago to the day today that the Commission published their proposal for a review of MiFID/MiFIR. And the establishment of a consolidated tape. And it's taken almost as long to come to an agreement between the Commission, the Parliament, and the Council. So by no means was it easygoing, and I think most of the audience is aware of that. I also think that as policy issues go, those that were in favor of an ambitious consolidated tape, I think can, without bringing on some type of curse on myself, I think we can claim the moral high ground here, because we never really flinched. We did not alter our position at any point. And I think it's fair to say that the exchanges did perform some pretty significant U-turns along the way and along this negotiation. And to be honest, I think it's kind of easy to understand this dichotomy, because, it's very hard to argue against a real-time consolidated tape. It's such a clear use case as to why we need it. But the exchanges were in that very position. They were arguing, when the proposal first came out, they said, well, let's go for a 15-minute delayed data, maybe even end of day. Let's focus on other policy issues. There aren't very strong use cases for the real time. Let's just start easy and slow with 15 minutes of delay, which of course we had to push back on and explain that a slow tape with stale data was a very limited value. So that was our first battle. The next one came in the form of the exchanges, and in my mind, they were very much sort of hiding behind the smaller exchanges. So that became the new battleground. So the claim was, how could you think of introducing a consolidated tape when it's going to hurt the smaller exchanges of Europe, who rely so largely on their data revenue, and this could imperil their listing and trading activity, and of course, I think, most of you again will agree that if anything, this would be a pretty major benefit even for the smaller exchanges, because they would get that added visibility, and there would no longer be a need to opt in for data. So to say, oh, I really am interested in seeing the Bucharest Stock Exchange or the Athens Stock Exchange, the data would be there automatically on your consolidated tape. So it brings much more sort of eyes and visibility on those securities. So yeah, so I think that didn't take them too far, the small exchange argument. And in the end, I think as the community that was in favor of the consolidated tape, we said, look, if you want to have an opt-out, and if exchanges feel that it's not in their interest, that's for them to make that call. They can decide to opt out, or if they are opting in, they can have a preferential remuneration scheme. So they will be compensated on a better sort of higher, proportionally speaking, a higher revenue than the established and larger exchanges. The next fight came, and this was an interesting one. They said, all right, fine, we didn't succeed with our prior sort of two strategies. Let's just do an ETF tape. Forget equities. There's a lot of buzz around ETF. Okay, we'll do a bond tape, which was, as you know, the sequencing was always from early on was established. It would be a bond tape and then the equities tape. They said, right, we'll do bond and then let's do ETF. And that we can live with, because it's unlikely to eat into our revenues, although of course they wouldn't say that publicly. And there too, I think we held firm because, you know, from a consumption standpoint and from an ease of use, it really makes sense to have ETF and equities data together combined on a single tape. If you consider that it's the equities trading desks who are going to be, you know, consuming the tape, there was very little sort of understanding why we need to have a separate process and a separate tape, other than to kick the equities tape down the road and you know, and show kind of some kind of success around that. You know, and then fundamentally, equities and ETFs, you know, behave in the same way. There would probably be one or two additional data fields to accommodate ETFs, but otherwise you're looking at very much similar data sets. So then fast forward sort of, you know, into the last few weeks before the summer, and then again picked up in September, October timeline, you know, is where we had sort of the very last, you know, sort of confrontation with exchanges, which was around post and pre-trade data. So we managed to get pre-trade data into the tape, albeit not exactly how we would have liked, in that there is no venue attribution. So you would have a European best bid offer, but no ability to see the venue that's offering that price and that volume. And also, we don't get the depth of book. So it's top of book only. So now I'd like to maybe just, you know, talk about what we didn't get, right? You know, and how this final proposal could have been improved, and you know, what we would have liked to see in an ideal world, okay? So firstly, as I just mentioned, you know, venue attribution is pretty important. And I think, you know, even if we're talking about top of book, it would have been a much better sell if, you know, you're able to show not just price and volume, but where that price and volume is being offered. So yeah, so I think, you know, it's nice to be able to get an indication of where liquidity is, and sort of what the best price is at any given moment. But the fact that you can identify the venue, you know, is a little troubling, and you know, from a best text standpoint as well, I don't think it's ideal. So we see how that evolves. There is a review built in. So by June 2026, the Commission does have to, and ESMA together, they do have to look at, you know, how the tape has performed, and whether there is, you know, a case for expanding and potentially bringing in the venue attribution. So that's one point. Another thing we didn't get, I've also alluded to, is depth of book, because while we understood that politically it would just be going too far to have, you know, 5 layers from day one, we were hoping that the CT from day one would collect 5 layers of tape, so be technically set up to receive, you know, sort of further layers of data. That we didn't get, so we're sticking to the sort of EBBO. And then finally, and this to me is really critical, and I think we'll see it becoming so important when the tape actually launches, and sort of, you know, in the more, you know, in the more medium to long term, is around governance. You know, and so this is something where we had strong proposals that we put to the Commission, we put to the co-legislators, that we want to see a strong governing body. We want to have, you know, a decision-making body, a board that is broadly representative. So you would have both the data provider community, but also the user community, right? So the ETF issuers, the APs, the asset managers, the sell side represented with voting power. Okay, so that would have been kind of in an ideal world. And you know, the voting power and the ability to kind of govern the tape is important, because those are decisions you would be making around potentially on the pricing of the tape, around the underlying technology that's being used, around the speed of delivery, and around the actual content that's covered by the tape. And interestingly, this governance question is pretty much where the US is at. And remember, they're 40 years plus into a consolidated tape for equities. And those are the very debates they're having now. And there's, of course, as you can imagine, a lot of pushback from the exchanges, you know, and the SEC tried to kind of remedy that, and to provide a better governance framework where it would be more equitable. And I think that's been pretty much struck down. So the user community, us, we're still kind of struggling in the US as well. So there's little hope that users can have more say in pricing and the type of data that's received. So that's on the governance piece. And then there's probably a second layer on that governance, probably a little bit more relevant for the bond tape, but also relevant to equities ETFs, which is around governance insofar as it provides and monitors for data quality, and so it's not really a given that the CT will from day one provide, high quality data with little errors and so on. So it's important that either the CT provider itself has that capacity or ESMA is in a position to police the content and ensure that it's of the highest quality and that the data providers are in turn providing good data. Okay, so maybe at this point, can I just quickly pull up a slide that I had to kind of show you what we can expect in the coming months and years. So if we situate ourselves now, we have October 2023 on the kicking off on the timeline. So this is when the final technical trilogues took place. We have a final agreement, so that's done and dusted. What we are waiting for is more kind of formalities going through the EU legislative process. So in January next year, we expect a vote in the European Parliament, a plenary vote, and then the Council again has to give a final approval, and then it goes through kind of the legal services, and we would have publication in the official journal of the MiFID review. We're estimating around end of Q1 of next year, so end of March 2024, right? From there, ESMA is out of the starting blocks and they have 9 months, so the 6 plus 3 months that you see up there on the screen. Within 9 months, they have to put out a tender for the bond tape. Remember, the bonds are first. So then we're looking at January 2025 for when this tender goes live, and about 3 to 6 months for them to make that selection. So June 2025 is when we expect to have a decision on who will be the bond CT provider. And at the same time, we expect the tender for the equity tape to be launched. And again, a further 6 months for the, for that process, which would then put the bond CT launch around end 2025, depending on how long they take to select the winning bidder, and then probably, and this is fairly conservative estimate, Q1 2026 for the equities ETF CT. So not before Q1 2026. So a good 2 years away, assuming everything kind of runs like clockwork. So yeah, just wanted to give you kind of a visual on what to expect next. So we're good now. If you want to remove the slide, that's fine. Now, who's in contention? So that's the next battle, right? Who's going to actually be providing this tape for us? And I think, those of you who are close to the topic will know that the 14 exchanges, at some point in these 2 years when we were negotiating the tape, there was a kind of moment, I guess, where they caved in and they considered that, that they can't fight us, they have to join us. So they're in the bidding. They've announced that they've created this kind of independent JV, which will bid for an equities ETF tape. I think it's questionable quite how independent and kind of detached, from their own business they can be, but that's something to be seen. Now, the other contender that you might be familiar with is Adam Mansion. They were actually kind enough to loan me the timeline that they had prepared. So, Adam Mancha is very much kind of the product of buy and sell side. They were, another instrument, another voice in favor of an ambitious consolidated tape. Gosh, I'm looking at 9:50. I think we're coming up to taking longer than I thought. So let me go through. But anyway, so Adam Mancha is probably sort of the underdog, and if this was a movie and you had the 14 exchanges on the one side and you had Adam Mancha on the other, I know I'd be, rooting for the underdog, because frankly, the exchanges come with a lot of baggage, a lot of history, whereas Adam Mancha, if you can visualize it, slightly utopian, but it's a consolidated tape by the users, for the users. includes sell and buy side. It could be a very nice kind of new, model for data for us in Europe. The difficulty Adamantia, I think, faces is the willingness of a lot of firms who have been open to the idea, but are maybe less open to opening up their wallets and supporting at this stage. But they do understand. But it's a few kind of steps ahead to imagine this is a way to control data costs. This is a way to have more ownership of market data. Okay, so if we're still good on time, I'll just maybe tell you where we can still influence and we still hope to have, kind of shape a little bit what's to come. So I think the focus moving ahead is going to be on level 2 legislation, so the secondary legislation to come out when ESMA actually produces its regulatory technical standards for the bids. We want to have a focus on governance, so we want to keep that focus there, and also on reasonable commercial basis. So ensure that the tape is provided with just a small margin and is very much related to the cost of producing the data. And I think my personal kind of objective looking ahead is that I would really like the exchanges to drink our Kool-Aid. And I think it's not too late for them to drink our Kool-Aid, because their attitude so far has been to resist, an equities ETF consolidated tape. Again, I think it's quite short-sighted. It's about short-term gains, preserving those data revenues, and it's really not thinking about, how this can provide a lift and, frankly, put a stop in the decline that we have seen and that is, sort of documented. We know that there's been, compared to our peers, we have not only plateaued, but we've actually gone down, whereas Asia Pacific and the US are showing ever higher rates of trading volumes. And also, if you look at European fund managers and the composition of our investments, today we're 43%, 43%. So the highest amount exposure we have is to US equities, and Europe is around 25%. That used to be the reverse figure. We used to be much more heavily exposed to EU versus US only 10 years ago. So the trends are really not so good. And also from a global investor standpoint, we have such a great product. We have the UCITS wrapper. It's from a tax standpoint, it's highly attractive, and it makes us very competitive versus the US ETF. And again, we can't fully capitalize on that because we don't have the liquidity picture. So again, this is where the ETF equities tape would kind of lift us. So if I could just get the exchanges, to focus on that, and also to maybe join me in bringing this message, hi Tom, is that, what, don't compare yourselves to the US. In the US, I do think we also have market abuse, and you do see the exchanges kind of charging, ridiculous prices for the data, but they can do it. They can get away with it. We don't have that luxury, and we need to make our data well-priced, competitive, and sort of consolidated. And I think that would go a long way in terms of kind of lifting our capital markets. Sorry, I overran. Probably had a couple more things to say, but perhaps we can go for questions, I guess.
No worries at all. Yeah, we've had a couple of questions. Great stuff, Susan. I suppose one question from me really quickly was, you released a report about saying sort of, there could be 1 trillion inflows into UCITS ETFs if the right kind of consolidated tape got introduced. Could you talk a little bit about why this number, why a tape would be so powerful?
Yeah, so that was basically based on the number of inflows that you have into US ETFs and how much of that US ETF investor base is made up of non-US investors. So we're thinking, we were part of that group, of course, but if you strip out EU and you just take the LATAM and the Asia Pacific, how much of that could be redirected to Europe if the tape is there, and if if fund managers can kind of see the liquidity picture and have more confidence in trading our product. So yeah, that's where that came from.
Yeah, good stuff. And then just finally, because I'm conscious we're running out of time, but how much guidance has been offered on the pricing model of the tape? Can you shed any light on that?
No, you need to give me another webinar to talk about pricing. This isn't fair. You know what? I think that's when we'll see some of these new provisions come to the test, Tom. I think they'll be very much tested, and we'll see how much the RCB that I alluded to, the reasonable commercial basis, will be tested, and and we'll see again. I guess it's two-step test, isn't it? It's the legislation, and then who ultimately wins that bid, and who's providing the tape, and how they use it. So it's a lot of questions, sadly, still in the air. But yeah, we're progressing, and yeah, if you can get the exchanges to drink the Kool-Aid with me, I've got plenty here to share.
Great stuff.
Thanks a lot. Okay,
yeah,
Tom.
that's sadly all we have time for. But Susan, thank you so much for coming on and sharing some of your insights with us today. Up next, we've got our panel of the day. So looking forward to that.